Good morning, gang. Good afternoon, good evening, good night, depending on where you are in the world when you're watching this. Welcome back to this week's altcoin update. First and foremost, remember, nothing is financial advice. This is just for educational purposes only, and it's my view of the markets. Now we've got that out of the way, let's take a deep dive into the chart, shall we? So we put out a request on Twitter, like we do every Monday, asking for your altcoins to be charted, and this week's requests were Fetch, APT, Woo, and PAAL. PAAL. Again, I always struggle with pronunciation. I'm from Yorkshire after all. So we're going to take a deep dive into these four charts, see if we can find some setups, and talk about what to expect next. Now, before we get into that, big shout out to our partners over at Prime XBT. If you don't know who Prime are, they are a crypto exchange and they are non-KYC. And the beauty of these guys is you can not only trade crypto, but you can also trade FX, commodities, and stock indices. So if you do want to check them out, check out our link down in the description. Full disclaimer, it is an affiliate link. I do get a kickback on your trades. And if you do use our affiliate link, then you can get up to a $7,000 deposit bonus. Okay, so once again, big thanks to Prime for sponsoring today's video. Now, let's start off with Fetch. So, first and foremost, if you did subscribe to our YouTube channel back in January or before, and you caught this move, very well played to you. And if you did catch that, let us know down in the comments. I read every single one of them, and I try to reply to every single one of them too. So, if you are massively up on Fetch, well done. So now, what's going to happen next? Well, let's get rid of some of this stuff. We don't need this anymore. Let's get rid of our magical green boxes, and let's talk about this uptrend. So first and foremost, I want to throw in a little bit of educational content here. Now, I make reference this all the time. When a chart goes up in a straight line, people get so excited by this because the bags are pumping, it's all crazy, everything gets euphoric, and then what they don't realize is because it went up in a straight line, when it does start to turn around, it normally comes down in a straight line too. So what you want to see is you want to see structure being built. Now, we are looking on a daily chart here, and we can see some structure. We've come up, gone sideways, come up, gone sideways, up, sideways, up, and now sideways again. So this is good. Okay, this is healthy price action. So therefore, what we do know is if and when price starts to come down, we can look for reactions in these zones. Now we can back that up even further by throwing on a volume profile. Now what I'm going to do is I'm going to drag this volume profile right back. In fact, we'll use the same pivot point down here. From this pivot point all the way along, and we can see here where the volume is. Now, hoping you can see this on your screen so I can see it clearly on mine, we have some volume here. We have more volume here, and then we have even more volume down in this last consolidation that led to the up move. So this is where we want to be looking for trades, and this is keeping it really simple. There's so many more tools that I use and that I teach in the group, okay, but we're going to keep this really simple for YouTube. So first and foremost, if we do start to retrace from where we are right now, we want to be looking, where's the volume support going to be? That's what we want to be looking for. Okay, candlestick patterns, any of that stuff, I really don't care for because, quite frankly, it means nothing. What we want to see is we want to see where the volume is. So we know we've got some volume here. So if we do come down into this zone and start getting a bullish reaction, then we've potentially got a long trigger within this zone. Once again, it's not a case of setting limit orders. If you've watched me for a while, you understand this. If you're new to this channel, then you need to understand this. It's not a case of I don't trade by setting limit orders. So I won't leave limit orders here. I won't leave limit orders here. I won't leave limit orders down here. That's not how I trade. Because what happens if price just comes into this zone and just nukes straight through? It's possible. Anything's possible. It's trading. We're playing probabilities here. Okay. So what I want to see is I want to see some strength. So I want to see price come into the zones that I'm interested in. Come into the zones. And then I want to see a local market structure change on a lower term time frame. And if I get that, then I get a trigger. If I don't get that, then I wait for lower. Now, how else can we improve the odds of finding a zone where we're going to bounce on top of volume? Well, we can use fibs. So let's use fibs from the start of this move up here. Now, bear in mind, I'm on log scale. However, my Fibonacci is based on linear scale. Just leaving it on log scale here because it makes it easier to view. So what can we see here? Well, we've got this consolidation here, which we know there is some volume. It's not great. The 0.5. Now, if you are an ICT subscriber, then, we all know that he likes his 0.5, we likes his, his premium and discount zones. But for me, the 0.5 isn't that relevant when it comes to crypto. More relevant in traditional markets. So for me, this isn't the strongest zone. Now we know that the golden pocket is normally a good zone. However, we don't have much volume around this golden pocket backing it up. But what do we have? Well, down at this 786, we do have the first sign of a decent cluster of volume. Now, once again, I'm looking at this on Binance, by the way. Now, each exchange is going to vary, but we know that a lot of volume goes through Binance, so that's not a bad thing to look at. So let's say that we come down through this level and we don't get a reaction here, and we come down further to this zone here, which is the higher volume node, down at the 786, and we start to get some sort of bullish reaction down here. Then we've got a long trigger. We don't get anything. We don't get any bullish reaction down here. Then leave it and let it roll over further. And if that's the case, if it is going to roll over further, then realistically, I'll just clear some of these out. I'm going to be looking back into a more of a higher time frame play. And I'll be looking back into this zone here, which this was the range that caused the breakout. So what we can do is we can clear this up a little bit more. I'm going to do another volume profile within here. Where's all the volume in here? It's right at the bottom. So what we can look for is if we do get acceptance back into this range, back into this higher time frame value area high and this lower time frame value area high, and we start coming down lower, then we can start to look at the bottom of this range because we've got the point of control down there, we've got value area low down here, and we can see, even on this one, it's pretty much the exact same thing. We've got some structure down here. And then if we get a bullish reaction, then we've got a long trigger. So my plan for longs on this would be quite simple. A, do we get any sort of reaction around here? Yes, no, probably not. It's not my favourite area, if I'm being honest. Now B, around the 786, do we get some sort of bullish reaction around here? If we get that, great, happy days. Now, if we don't get anything, then, quite frankly, I'm going to be looking down here. So this is how we trade. And this is where people go wrong. And you look up to influencers and the absolute laps of Twitter and things along those lines, and YouTube especially, is they want to know for certain where price is going. I want to know for certain that price is going to come to this green box and then moon. I want to know for certain, but there's no certainties. There's no certainties. All we can do as analysts and traders is figure out where's the most probable place for a bounce on the chart. Do we get a reaction in this spot? Yes or no? No, okay, we look for lower. Do we get a reaction in this spot? Yes or no? No, okay, we look for lower. Do we get a reaction in this spot? Yes, okay, well in that case we've got the trade set up. Then we can take the trade and then we can look to play it back up. Now again, depending on what sort of structure is formed on the way down, we will have distinct levels to play this up to. First level, second level, third level, blue sky breakout, if it gets there. Okay, we don't know. We don't know. All we can see is look for the major zones. Now, what happens if this one fails? Well, if this one fails, once again, then we just take it even lower and we look down at this point of control. This is the point of control that caused the overall move. This is just an intermediate structure in between this. Okay, if it does come in down here, then again, it's another opportunity. That's what we've got. Now, would I be looking to short this down? No, because I've got no technical reason in here to short. But what you got to think about is the trend is still up. The trend is still up. Where does this break any form of structure on a daily chart? Realistically, there. So you've got to come all the way down here and close a daily down here to be in with a chance of coming for lower prices. So therefore, there's no reason to be aping in shorts here. Okay, the trend is still up. Daily's up, weekly's up, monthly's up. Everything's pointing up. Don't try to be a contrarian and blow all your money when the market is arguably in the easiest mode you can trade. What do you want? If you are shorting here and you're hoping for an absolute monumental breakdown, which might happen, we don't know. But why do you want to play that? Why do you want to play that? Where you're going against every time frame that's pointing up? Do you just want to post a screenshot on Twitter to say, look at me, I caught the top? That's not a trader. How many times have you tried attempting that to get that final shot? You probably need to make back 30R just to make up for all the losses that you've taken trying to short every single rise. And in that case, even if it does nuke all the way down, you're still probably in deficit. You got to think about that. Just, stick with the trend. It's so much easier. It's so much easier. So that's Fetch. Hopefully you've learned something out of my little waffle there. I try to explain things as best I can. Now the next is Aptos. Now we are watching this in the group as it stands right now. So first things first, let's just get a volume profile across the whole thing. Have we got volume on this Pith exchange? Probably not. No, we don't. Okay, fair enough. Right, so what we want to look at now, daily structure. We're still making high highs, high lows. Nothing has been lost. Okay, weekly structure. We are pointing up. Monthly structure. We are still pointing up. Okay, this is the low that caused the high. This came down. It did not break this low, so technically, the easiest way to describe it is range bound, but technically every other time frame it is pointing bullish. So therefore, what you want to be doing is looking for long trades. So let's zoom out. So first and foremost, let's have a look. Have we got a long or a short here? Well, unless you're a lower time frame trader, probably neither. So let's talk about the upside first. If price continues up, realistically, we've got some key highs here. Now, these highs not technically being run, but it's close enough. So key highs here, key highs here. So if price is to continue up, again, we don't know. We don't know, but the trend is still up. So therefore, probabilities are in favor of more upside. Once again, doesn't mean I belong in here. If we continue up, first and foremost, we've got some key highs. So, little poke above, trigger some stop losses, people getting out break even that might have been holding it since back in February 2023. Once again, they've been holding that for over a year now, so they might want to get out break even. So you might see some lower time frame pullback. Now, if it comes up higher, the same idea again. And probably something that I should touch upon here is about breakout trading. So what a lot of people are going to want to do, and what destroys most of the market, is, you guys know me, if you follow me for a long period of time, breakout trading, it's for noobs. Okay? It's something that when you first come into crypto, you get shown some pretty patterns. There's my triangle, yeah. And then once it breaks this, you wait for confirmation, which nobody can ever tell you what confirmation is because it's all bullshit. And then you trade this. And then what happens is you get your breakout, comes up, and then it grabs the liquidity and then likely goes in the direction that you're looking for. It's just what happens. It's so easy to catch people offside with breakout. It's the same with the old head and shoulders pattern. I poke fun at these all the time. To get your head and shoulders. Now, what kids will teach you to do is trade this. They'll teach you to do this. Trade this breakout here. Once it breaks out, once you get a 4-hour close down here or a 1-hour close or whatever, you take that trade, and then what happens is price comes down and then it just comes up and stops you out. And again, this is why breakout trading absolutely sucks. And if you are a breakout trader, let me know your win rate down below, because I would put money on it that it's low. So if we do come up here, this is not something I would be longing here, because likelihood is on the first attempt at this, it pops up, grabs a load of liquidity, catches people offside, and then has a bit of a pullback. Now, is that a full-on pullback and brand new lows and that's it, it's doom and gloom, game over? Probably not. As long as it maintains the structure. It could do, but it's all about the structure. Does the structure remain up? What you'd like to see, if you're bullish, is this. And then start to grind up and then pop. That's what you want to see. That's what you want to see. You want to see it consolidating under resistance, which is a bullish sign. You want to see it poke above, grab a bit of liquidity, pull back, and then continue the grind up. That's what you want to see if you're bullish. And then you can start looking at blue sky breakout and new all-time highs and start to forecast some targets. If we throw it on I know this is what everyone wants to see. Some fib extensions. Let's bring this down. Outer log. If we do start poking above this, let's just clear off some of these because it's a little bit noisy. I'll do my heading. What are your common targets? Well, your 1-to-1's a common target, so $22. Okay, your 1, 2, 3, 6 is a common target, $26. U1618 is arguably one of the most common targets for $32. Does it mean price has to go there? No, it doesn't. But it means that these levels, if price does get to these levels, then you want to be paying attention. You want to be paying attention. What happens at these levels? Do you start getting full-on reversals? Or do you just get continuation? Okay. Think about it for profit taking. Now, what happens if it doesn't go up first and it just comes down? Well, let's flip this back into log so we can see this. So first and foremost, what I'd want to do is, as it stands right now, obviously, if it goes higher, this fib will change. But we can see here. So we've got a lot of consolidation around this golden pocket. So if price does start to roll over, come back down to this golden pocket and get a good reaction in this sticky zone here. Now, again, I can't throw a volume profile on because we're on this pith exchange or whatever it is. However, I do know from the other charts that we've got volume down here and we start getting a bullish reaction. Then we've got, quite simply, a long trigger and we'll continue trading the trend. Yes, it will start to break some structure like the daily. However, if you zoom out and you look at the weekly would remain intact. The monthly would remain intact. Okay, so down here, for me, would be a buy opportunity. Now, what if that didn't give anything and it continued to roll over lower? Well, it wouldn't look the healthiest if it started to lose this consolidation here. However, if it did poke below this consolidation here, specifically below this low into this 786 region, then once again, there's potentially a long trigger. Start to lose that, then it starts looking a little bit worse for wear, and I've been looking to come down and contest these lows down here. Okay, very simple. Very simple. So, that's apt. Clear off some of this shit, otherwise it's going to piss me off. There we go. Right, woo. Got some Alt-TA on here from last time we chatted this. So obviously we came into this golden pocket. Decent rejection, and then we've had a push up, and then we've come up to this 786. So this is why I like the 786. So for me, I love this zone. The zone between the golden pocket and the 786. This as a whole is a high resistance zone. Okay. If you want to know more about this, then come check us out on the website, because this is the sort of stuff that I teach. It's a fun resistance zone. Now, we are getting a bit of a rejection here. So what we're going to do now is just clear this off, bring this over, so we can incorporate all the data, and we can see here. Now, we're also going to do a separate one, because I want to see the fresh volume on this. I'm going to start it from this point here. There we go. So, let's talk about up first. If we do come out and take out these highs without a pullback, then I'm going to be looking first and foremost at this high here. Do we get a poke above and a drop back down? Well, there you go. Potentially a hedge position. But once again, if you are taking a hedge position, remember the trend is still up. So therefore, you want to be cutting out of these as quick as possible. You want to be getting a quick take profit one, stops to entry, and then that way, if it does continue up, going against you, then you don't lose any money. But at the same time, taking a hedge like this, you're looking for a range to form. So if you get a range forming down here, then underneath it, after that pullback, and you get some consolidation under resistance, then that's bullish. So therefore, at the low of whatever consolidation is formed, the local range lows, you want to be looking for longs. Okay? Then that way you are fully hedged. If it obviously starts coming out even higher than that, once again, you start looking at some fib extensions. Now, first and foremost, let's just do this just really simply. Let's clear off. In fact, we'll leave these on because we're going to have a look at that in a bit. So we're going to use this low here, up to this high, down to this low, and once again, you can see here. I mean, look at this. This is why I love fib extensions. You really need to understand fib extensions. Look at this, 1-to-1 fib extension, which was also that golden pocket, caused a pullback. Now we're coming back up, 1.133, causing a consolidation. If we start coming above this, okay, but 1, 2, 3, 6 just above us. Not really interested in that right now, because we'll be more interested in these highs here. Start clearing above that, then we'll be looking up around that dollar mark. Now, one thing to know if you are new to crypto is crypto traders, especially people that are bag holders, they love round numbers. They love round numbers. So therefore, everyone will be chanting right now that they want $1. Woo to $1. That's what it'll be. And then if it surpasses $1, they'll all be saying woo to $10. That'll be the next one. Because they love round numbers. It's just how it works. However, we can see here that we've got fib confluence with this. A fib extension confluence, 1618, $1.08. So if we do come up out of this, And I'd be expecting some sort of consolidation or some sort of sticky zone around here. Even though it's in price discovery, you will still get this. And this is the beauty of it. And this is how you understand how to trade a bull market. In fact, I've got several modules on our website about how to trade bull markets, because it's a very different style to when you are trading a bear market and you are trading off historical data like this. But this would be a key area of interest for me. Could just blast straight through it. It might not. Who knows? We don't know until it gets there. If it gets there. Now, what happens if we don't go up from here and we just go down? Well, first and foremost, if we do come back down, you've got this point of control here locally. Do you get a reaction there for a long trigger? Great, cool, take it. If not, no, don't. If it starts to come down lower once again, then I'll be looking first and foremost into this consolidation here, but likely it is to run these lows into this value area low here. So a quick swipe below, grab the liquidity from down here, and there's the potential for more. Now, what happens if it goes even lower than that? Well, if it goes lower than that, then I'm going to be looking realistically at this high volume node down here, which is coming in around 22 cents. Start to lose that, we'll look back down at the point of control. Did we get something at the point of control? Great, cool. Trade. If nothing, then realistically start to lose this point of control. I'm then going to be looking back down here at 12.5 cents, and then potentially targeting these lows here. Very simple, very simple. A few volume profiles, a few fib pulls, market structure. It does you really well. It really does. Now, finally, PAAL. I was just taking a look at this before the stream today, before the video. It's a really nice channel. I always love a good channel. Now, once again, everything is in an uptrend. Daily's in an uptrend. Weekly's in an uptrend. If you are shorting this, then you are going against most trends. Therefore, you need to be locking in that early take profit one, stops to entry. However, yeah, I personally just wouldn't be shorting it. What's the point in shorting when you've got easy mode? Okay, you want to see some major structure loss before doing this. So let's talk about downside first, because that's probably easier. The question is can we get a volume profile on here? Does it have the volume data? Yes, it does. Okay. So we see here now, I'm on Gate.io, no idea about this exchange, I'll be honest. So I don't know if this volume is good or not. However, we can see here we've got a little bit of volume here, a little bit, not much. Bulk of the volume's a lot lower. So first and foremost, if it does come down into this consolidation here, do you get a reaction? It'd be even better if it lined up with this channel. That'd be better. That'd give me a little bit more confluence and a little bit more confidence in this zone here. However, if it doesn't hold there and it just comes down into this channel slash this value area high, once again, it'd have to come down pretty fast to get into this. Timing is a big important factor in this. Do we get a reaction around this zone here? Maybe a little fake out of the channel. Get back into it. Then we've got a long trigger. If that doesn't hold, and then this channel does break to the downside, it's not going to look the best. So then you'd be looking within this zone here, around 13 cents. And if that doesn't hold, then you're going to be targeting these lows here. At least these lows here. Taking out those, potentially for a little SFP of these lows, grabbing all the liquidity from below all these stops here, and then you potentially got a long trigger. Failed to hold there. Then point of control. Okay, 1.8 cents down there. But realistically, as long as it's in an uptrend, you don't really have to start panicking about these levels. It's just levels to be aware of. That's what you need to pay attention to. Ideally, what you want to see from an Elliott wave point of view is ideally, if you're bullish, you want to see it break out with this channel and continue going up. Once again, I won't be trading a breakout here. I'd be more inclined to take a short. However, that would be massively against the trend. It's just because I'm not a breakout trader. So you've always got three options. Always remember this. You've always got three options. Long, short, no trade. Scenarios like this, for me, realistically, probably no trade. But again, we don't know because we don't know what happens until it gets there. So it's quite simple. That is quite simple. Now, once again, if we start to look at some upside potential for this, fib extension from the low to this high, I'm going to use this pivot low here. However, this is also a valid pivot low, depending on the correction type itself. Now, and we're looking at common targets. Well, we've got the 1-to-1 here at 166. Okay, 1236 at 328, and then your 1618 at 984. Now, if we do start coming up to these levels, it'd be major profit taking levels, unlikely. Potential for a counter trend trade. Okay, so that's all we've got to do. Keep it really simple. Keep it really simple. There's a reason why dumb bulls outperform technical traders in a bull market. But the big difference between the two is that the dumb bulls will give their money back when the market finally does turn around. That's the big difference. Okay? So it's something you need to be aware of. So if you are holding bags of some of these shitcoins, okay, make sure you are skimming profits along the way. You do not want to be in a situation like what we had at the top of the bull market when Bitcoin hit 69k a few years back, and then holding those bags 90% drawdowns. What's the point? What is the point? Take regular profits as price goes up. Look for new projects, look for new interesting charts, reinvest some profits, but make sure you are paying yourself. Make sure you are taking profits. Don't be that moron that goes broke again. Okay? Right, hopefully you've learned something today. If you have, hit that like button. And until next time, gang, as you were. Bye-bye.